Yo, 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 what's going on, guys? It's your boy, TV here from SMB, jumping right into things. I want to do a little talking about where we are at right now on SPX, the levels that the bulls are just clinging to for dear life right now, and some potential, maybe, reversal plays to the upside that I'm looking at that look really spicy, that are hard to take right now. But if we do see some upside from SPX and from the Nasdaq, then I will definitely be looking to play a little bit of upside. Nothing long term, just some small trades. But this is what I'm seeing right now on SPX zooming in here today. So we get our big fat gap up. We got a huge gap up today on SPX that immediately got sold off. But we gap up from 36.55 clear up here to about 36.91. We rip all the way up here to this level and we resist off of that. We resist. See this red rectangle I got here? This is where sellers are stepping up. They're not letting us get that level. And I'll tell you why that level is so important and why the bears are fighting to keep that level for dear life. But you could see, where have we rejected? We ran up to that reject, run up to that reject, hard rejection off of that today. Sellers stepped in immediately, and then we get a little bounce off the gap. We come up. That was an easy bear flag. So I didn't take any trades today. I'm still looking for a longer kind of swing trade to the downside. But I mean, this was an easy play if you wanted it. Shred down out of that bear flag, super easy. And because VIX is so elevated, I don't like calls, I don't like puts because premiums are so high. Because when VIX gets so elevated, premiums go through the roof, and they just do not move correctly. If you're wrong on them, you're very, very wrong. If you're right, the reward isn't that great. So that's another reason I'm not really playing any day trading on SPY. I'm just sitting and waiting for the next move. I think we're setting up for a really nice move, so I'd rather be positioned for that, get some greater gains, and try to scalp these smaller kind of moves we're having. Although today we got a really nice big move that I wish I did play, but oh well. Market's open tomorrow. Anyways, so we just fill the gap, and a notable thing we did today was make a new yearly low officially on SPX down here at 36. 23 is where we wicked down to. That is a new low. This green line right here is the previous low. We got below that. We did reclaim it, and now the key level that we're holding right now that we just barely held on to for dear life is this very important level here at 36.47 or 36.45 or 36.30. Christ, I can't even see this level. Yeah, here we go. Key level 36.46. We closed above that just barely, and we were just holding on to that. That on SPY, that's 363. Huge key level that it was really huge to see the bulls retake that. But heading back to SPX, you saw they try to sell us back down below that previous year low, and we bounced off of that. So a little bit of bullishness towards the end of the day. Was still a red day, but if you're looking for any upside on SPX right now, I would very much suggest that you don't try to play any upside until we reclaim a key level. That is always, and that's always when the bear rallies come in, is when you reclaim a key support level. So this very key critical level reclaim I have marked out on my chart. This one, I can zoom out a little bit more. This one's so important because back here over in June, late June and July, when we got that bounce off the bottom that we had here in June. We got the bounce. We bounce up here at 3,900. We pull back. Where do we find support? Key level right there, 37.40. Bounce off of it, pull back again. Where do we find support? Key level, 37.40. And then if you bought off that bounce, you made a lot of money. So that is exactly what I'm looking for to play any upside. I'm not touching any upside until SPY does that, because you can tell that's why the bears are stepping up right here. They don't want the bulls getting near that. That's why, I mean, we did gap down below this level, but you can see we gap down, sold off of that level. We try to retake it, sold off out of it. Try to retake it, sold off. And there's a big fat gap on SPX to fill as well, and that's right where we sold off of this morning, was where that gap is. So That is the major level to the upside. You got to reclaim that level. You have that level be support, not just wick above it, but actually close a daily candle above there. To the downside, and now it's very clear what our downside support is: 36.37. And then below that, 36.20. That's the absolute rock bottom. And then we're gonna have to really zoom out. To locate any new support that we could potentially see. And I would guess we get some support here at 35.51. But another thing I want to talk about today is if you zoom all the way out to your weekly charts, turn on your 200-week moving average, you will see this nice yellow line sitting right here, sitting right there at 35.90. That's why I have that red line right there. That's your weekly 200 week moving average. And you can see, look at that red line. It's right there. It's right on top of that candle wick. That was a previous resistance that turned into a support, but way back here in the fall of 2020. So that's a very key level with that confluence with the moving average. And I'll tell you why this moving average is so important. So let's do a little history. 2018, late 2018, we get a big market crash in the month of October through November through December. Where did SPY bounce? Look at that, right off of that 200-week moving average. Zinger, see ya. Zooming back, let's see. Oh, we had a little trouble here early 2016. Where do we bounce off of? 200-week moving average. See ya. Okay, so this is a good one. This is a really good one. Going back to the Great Recession, we're here in 2008. Market's looking rough. We pull back. We get a bounce off that 200 moving average right there. You see that wick? Make sure my camera's on the way. Probably move that over there. See that wick right there? We bounce off of it. We pull back. We bounce again. These are all bull traps right here. We rip through it, and then the market tries to recover. We try to retake it. Nope. Denied at the 200-week moving average. We dump. And then you can get your confirmation for when was this recession over. Well, I mean, the bottom was over here, but this was just the bullish confirmation that the whole market needed to guarantee that the market wasn't going to crash again, because we ran up to this 200-week moving average, bounced off of it, resisted. All right, let's try it again. We test it, break it, retest, holds. What does SPY do? And then coming back over here, more trouble in the market in 2011, late summer of 2011. We dump. We come right down this 200 moving average, consolidate on top of it, bounce off of it, and then the rest is history. We didn't look back at it until way over here and 4 years later in 2016. So that's why this moving average is so important. Even though back in the COVID crash we plummeted right through it, it would have been confirmation if you bought when we broke that 200 moving average. We never looked back. But that was just a complete panic event. So, I mean, fundamentals were thrown out the window. We were having circuit breakers. That was full-on panic selling. But that's why that 200-week moving average is so important. Now jumping to NDX, or the NASDAQ, where are we? Well. Look at that big yellow line. Can you believe that? We are bouncing off of that 200 moving average again. Not really bouncing, but we have tested it last week. We held it. We're tested it again today. Look exactly here. I'll draw this line out so we can have it exactly. It's at 1180.07. Change the value. 1180.07. All right, so let's go into the daily. Where have we double bottomed on NASDAQ? Oh, and that's another thing I wanted to talk about on NASDAQ. We have a nice little double bottom. But I'll be damned. Look at where those hourly candles have wicked down to. Look at that. Boom. Off that 200 moving average. Bounced. Look at that. Boom. Off the 200 moving average. Bounce. A little curious. It's not like the cleanest double bottom by any means, but it is certainly something to watch out for. You can see it right there. It's got the W pattern. I'm going to try to not really draw it out. But it also has a double top off that key level. So, talking about the NASDAQ, that's the other thing. NASDAQ has the exact same thing as SPY. If you zoom out, this green line I have right here, let's go over. Let's look at history. Where have we found support and where have we gotten our bear market rallies? Oh, we broke through that level. We bounced. When we pulled back off of that 24th of June, we pull back from that. Where do we bounce? Where's the market bounce again? Or where's the NASDAQ bounce? Bounces off that green line right there at 1147 on the NDX, which on the Qs, let me find the same level on the Qs. So for the Qs, the same level is 279.50, and then bounce Double top up here, where we pull back to? That exact level. Boom. 279.50, almost to the on the dot, like 20 cents away. Then we bounce. So, same exact thing. And when we look at the NASDAQ, where are we selling off of? Every time we approach that level, sold off right on the money. Look at that. Right there. That level was already there. Boop. Down we go. Where we run up this morning? Uh-oh, sold off. Down we go. So, with that in mind, we know exactly the levels. The market has given us the levels. This is why I was being so patient, because I'm waiting for the market to tell us exactly where I need to watch for. So this could not be easier. We have double bottomed off of that line. I got a nice dotted line. We've double bottomed off that line, so we know we have strong support right there. So, looking to the downside, if we break that level, more downside. I imagine we're going for the next leg lower. Watch for fake outs, though. And then to the upside, we have 279.50. So, that's your range, 272.09 to 279.50. I'm not touching anything inside of that range. I think we could consolidate here all week. But also, looking at this dotted line I just made, let's take a look. Why is that level important as well? Let's see. Oh, well, look at that. I'll be damned. It's exactly, almost exactly, where we bounced off of back here in June. Just barely. I mean, it was a couple bucks off, but key level, we bounced off of it. So, that's why the market is holding that up so much. Then below that is 269.35. But looking at futures, same exact idea. Futures have an even cleaner double bottom on the hourly. I mean, that level is so huge. Same thing. You go to the weekly 200 moving average, it's right there. So, if we close this week, with this like tweezer bottom looking thing, I mean, that's a tweezer bottom on the weekly off the 200 moving average. And this, so I'll show you why this level is even more important on the Nasdaq, this 200 moving average. Look at this. COVID crash. We didn't even touch this thing. It bounced off that 200 moving average during COVID. We didn't even get close to it. Didn't touch it right there. We wicked down close to it back on the 24th of August 2015. But we haven't touched this 200 moving average until way back. Until, wait a sec. Look at this. Same exact thing, dude. Look at this. Same thing. Same thing back in 2008. We pulled back to that 200 moving average. Bounce. We pull back again, get a little bounce. We test it, test break, try to retake it again, and we dumped. And then fast forward over here, 2009, we take it, retest, take it, retest, take it, hold it, hold it, hold it, hold it. Look at that. Look at the tests off that yellow line. I mean, this, I know it sounds like it's too simple to work, but you got to look at history. What has this done in history? Zooming way out. Where is this? I mean, look at that. We almost tested it there. And then look at this. You can see, where did the dot-com bubble end? When we finally retook that. When did the dot-com bubble ended and we finally started recovering on the NASDAQ? So you buy right there on the NASDAQ at 35. And I mean, the rest is history. We came down to like 25 back in the Great Crash, but I mean, we haven't broken that yellow line, that 200-week moving average, in literally decades. 14 years, a decade and a half almost. I mean, this is what I'm talking about. This is why when the market just bounces, you have to look around and be like, hey, what are we bouncing off of? And you see that double bottom right there. So that's that yellow line. You don't see it on this chart because I'm on the 5-minute. But that's exactly where that line is. Boom, that yellow line. Bounce off of it last week, come up, test it, bounce, bounce, bounce. So just got to watch out for these things. Looking around the market, so I'm noticing something a little fishy on AMD. So chips, something worth mentioning in general in the market today is that chips were strong today. Chips actually had a green day. I mean, the whole market was sort of kind of green. Tech in general was green, but chips really outperformed the market. These have sold off so much, it's insane. In AMD sitting right now at $67. I'm looking at this blue dotted line here on Nvidia, and I'll show you why I find this important. You guys might think I'm full of BS, but actually, let's come to the weekly. If you look at this, this is a weekly trend line from all the way back here in 2018. So this is important. I consider this important because this was a year of consolidating right here for AMD. It consolidated right here for about a year from this $15 to $10 range, and it finally broke out of it when it bounced off of $9 right here back in 2018, April of 2018. And then you draw a trend line right there, all the way up through there. Look at that. We wick off of it, wick off of it. We faked out, broke out, bought out, and it has held this trend line ever since. Look at that. Pulled back in 2019, bounced off of it, almost bounced off of it in COVID crash. AMD didn't crash that much during COVID, but oh, wait a second. Zoom back in. What are we bouncing off of right now? What is AMD holding up right now? Wow, I'll be damned, that trend line. How's about that, folks? That's a little fishy, isn't it? And then let's zoom out on AMD. What else do we see on AMD? Oh, well, damn, I'm seeing a nice clean trend line support right here that we bounced off of once, twice, 3 times that we're retesting. We're getting very close to retesting. Wow, this looks like a falling wedge on AMD. I'll be damned. Isn't that a little fishy? Isn't that a little fishy? And then look at it, it's also sitting on its 200-week moving average, which mind you, it hasn't been below that since April of 2016. I mean, just crazy how oversold these stocks are. AMD, the RSI, so let's pop over the Weeble because I don't have RSI showing up on AMD, but looking at the daily RSI and AMD, we are down at like 24. Looking at SPY, we're down below 30 at 27. Looking at the NASDAQ, I don't believe the NASDAQ. Oh, yep, NASDAQ's below 30. Apple's not below 30, but NVIDIA just broke above 30. So this is what I'm talking about. Things are so crazy oversold right now. Microsoft is a great one, super oversold at like 27 on the RSI. Google, oversold, majorly oversold. So I'm seeing all these huge names that are super oversold and have just been going straight down, and I'm just like, how much longer can these things possibly go straight down? I mean, I know these things are probably going to get cheaper. I'm not saying buy now, this is the bottom. I'm saying for a tradable long position to the upside, for a small bounce in the market, it is looking good to the upside. I'm just not going to lie with you. I mean, there are so many puts in the market right now that there's just no way. They're not going to let it be that easy on everyone. They're not just going to let everyone just make all this money on their shorts by just having everything just go straight down. They are going to give us a bounce, and it is going to be a vicious one. It's going to roast everyone's puts. But I'm looking at AMD. I'm thinking that's looking like a sweet setup for a small, maybe 2-week calls. Also, you can zoom out to its over here on the daily. You could see, wouldn't that be a nice fake out? How many people are betting on AMD to just go straight through this? But you could see this past support AMD had. It pulled back to 67.41. It ripped up. So this was another big move here on AMD. So AMD consolidated in this range. It could not break 58 for the life of it. Look at this. It bounced off 58, bounced off 58, bounced off 59, 58. Finally take it. We get this one red day. It holds up. Big day. We get the earnings. This was an earnings move right here. But it pulled back to that level right there at 67.02. And let's see, where is AMD bouncing off of right now? Over here. Oh, look at that. It's bouncing right off 66, 67 area. 67 right there. I don't know. I don't know. I don't know. I'm just saying. I would not be grabbing puts. I'm waiting for the market to tell me where it wants to go next. But I just cannot. I said this in my last video like 10 times. I cannot look at this daily SPX. We have had 1, 2, 3, 4, 5, 6 red days in a row. You really think we're going to get a 7th? I know I said that yesterday after 5. But I'm just saying, wait for the bounce. There's going to be a great opportunity to get some bear shorts. I think a lot of bears right now are holding out on the, I mean, it's a terrible thing to hope for, but for the hope that we're going to get that crazy retail trader capitulation where everyone and their grandma calls up the stockbroker like it's 1980 and they say, take my money out of the stock market, god damn it, and everyone panic sells. A lot of people think that's going to happen in this upcoming month, but I'm not seeing it. I just don't think the damage has been done enough from the Fed. I mean, a lot of this selling off is just the fear from the Fed of them tightening rates, how tight they are being with their monetary policy. And that is a lot of this selling is being driven by that. But I just think the market is going to have to see some scary news. I mean, what the Fed is doing is not enough to take or to inject the public with fear and panic, and that is ultimately what causes retail's traders to capitulate and sell everything. Is when some crazy real life thing happens, like COVID, like back in 2008, housing crisis, Lehman Brothers, or was it Lehman Brothers? No, Bear Stearns. Yeah, Lehman Brothers goes under. Everyone's foreclosing on their mortgages. Like, these are the kind of real life events that actually wake people up and go like, oh shit, I gotta sell everything. And I'm just not seeing what could cause that right now. Right now, it's not been a slow meltdown, but it's just been a controlled meltdown where they give the market bounces to give it more room to the downside. And they always do this every time we have these crazy sell-offs. They always give us little bounces. I mean, that's why I'm just not gonna bank on some crazy event to happen, or I'm not gonna grab puts and like go straight up hopium and just pray to God that some terrible thing happens so I can make a lot of money on my puts. That just doesn't. The market it's been adherent to fundamentals this entire year. The only time it throws out fundamentals is when there's full-blown panic, and that, I mean, it happened back in the Ukraine war started. We kind of got that sort of move to the upside, but just be wary. Look, there's no reason you can't play the bounce. Even though the sentiment is very bearish, I can't help but look to the upside when everyone is so bearish, when everyone has puts, everyone's selling all their stuff. You have to look at the other side of the coin. But I'm still very open to the downside as well. I'm looking at Apple to the downside, but Apple's doing the exact same thing as the Nasdaq, not the exact same thing, but Apple is just, it's refusing to give up 148.50. I mean, we've double bottomed off of it on Apple. Look at this. Boom, boom. Just perfect double bottom. It did it again on the 23rd, and it just is not giving that level up. And so I'm looking around and I'm seeing weird things happening. And especially when the Nasdaq still hasn't broken its June lows. It's giving me weird feelings, weird vibes. I don't know. What do you guys think? Drop a comment. But I'm gonna try to do some day trading tomorrow. Oh, also looking at the VIX. Gotta look at the VIX. So where? Oh, look at that. Look at that. I said yesterday. What does the VIX do every time it gets up to this little rectangle? It typically wicks up into it and then sells out. It never stays up here, up in the 35s. And what did it do today? It wicked up to 34 and then dump back down. So gotta watch out for the VIX. When the VIX is this elevated, there's only so much more room to the downside. The VIX really only spikes like crazy when you get panic events, like over here back in COVID, like way over here back in January 18th, where we had that little mini crash. You can zoom way the hell out. No, you can't. Oh yeah, you zoom out to 2008, where we got that crazy. I mean, this is the only time that VIX really gets going that crazy highs, when you have these crazy panic events. And look at this. It's failed to do that. It's failed to do that all year. The highest it got was 38, and that was at the start of the year. It didn't even get that high from the Ukraine war. So panic is not there yet. And that's just all there is to it. I would not be trying to open puts right now. If you are, open them months out, months out, in case the market does get a crazy 5% bounce. Just buy those puts months out, forget about them, and yeah, that's all I got for you. Not financial advice. I'm not a financial advisor, but yeah, that's all I got, folks. Hope you liked the vid. I'll try to do some trading tomorrow. I've just not been I've been in a rough patch recently. I've just been trying to trying to anticipate the next move, get prepared for the next move, so I'm ready for that. Because I know when like right now, if I was sitting in Apple puts, I would be making this video and be trying to look for the downside. And that always, I notice that's one of the worst things I do. And that's honestly one of the worst things any trader can do is just be clouded, biased, because you have a position and you want that position to be right. So you look at the chart and you try to make it right in your mind. And I know I do that when I hold like a week long puts out or whatever. Like, I can't make honest, unbiased content and videos, and I can't be unbiased in my analysis of them. So that's why I've kind of just been taking it easy. I'm sitting in basically all cash besides a Google position, which I do have hedged. I have a December put, $95 put on Google, that if everything does crash, that's going to keep me afloat. But anyways, that's all I got, folks. Drop a like, drop a comment below if you enjoyed the vid. I'll see you guys next time.